This is Alan Bush with the Daily Financial Forecast for Tuesday, November 8th. Well, the big day has arrived, and everybody, I'm sure, will be glued to the TV screens to see just what outcome we do have. But the one rule of thumb for financial markets is that anytime markets become political, as they are right now, in fact, they could not be more political as we are in the midst of it at this point, it is a good time to stand aside. Definitely political markets are the most difficult to call or trade in. So I think that would be my advice for the day. Do not do much in these markets at this point. However, I do feel that once the elections are out of the way, the bull market will resume for stock index futures. So look for good gains at the end of the week across the board in stock index futures. Now, moving over to the currencies, we did see some strength in the dollar index in the overnight trade. Now it looks like some of those gains have melted away with the dollar index a little bit lower. Also, we have the euro currency trading a little bit higher, even though we did have industrial production in Germany coming in quite a bit on the weak side. Also, the commodity currencies, the Australian dollar and the Canadian, under a little pressure as energy prices are a bit on the weaker side. Longer term, though, we do feel that the Australian dollar will probably be the leader to the upside of all of the major currencies against the dollar, and also probably even more so against the Canadian dollar. And if you recall, the Canadian dollar a couple days ago just made an 8-month low, so the Canadian dollar is definitely a laggard. The Australian dollar definitely performing very well, so I think that's a very good spread to maintain or even put on, even at these levels, which have widened out at least a couple of hundred points in the last month and a half or so. So continue to trade the Aussie from the long side, and also long Aussie, short Canadian should continue to work. Now, moving over to the interest rate futures markets, basically steady up front, a little higher in the back as stock index futures and interest rate markets tend to be affected to some degree by what's happening in the crude oil and the indices. Longer term, we feel that inflation will dominate, even though it is not much of a problem right now, at least the way most analysts are looking at it. That should be the main influence taking the bonds lower. This is a trend that will probably last all this year and well into next year. So continue to trade bonds from the short side. Also, I think the most undervalued commodities now are the gold and silver. A lot of longs were shaken out by all of the hawkish rhetoric from Fed officials. But if we're right about inflation coming back, I think the prime beneficiaries of a situation of that nature would be the precious metals, gold and silver. So gold and silver should be bought on any breaks, and I think there will be some good gains later next year. In fact, some possibly new highs in the precious metals, I would think, at least in the first half of next year. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.